I'm David Buckland, CEO at Montgomery Investment Management. Welcome to this week's Video Insight. The Montgomery Small Companies Fund was launched in September 2019, and the period to October 2020, it has delivered investors a return of 14.7% after all expenses. This compares favourably with its benchmark, the S&P/ASX Small Ordinaries Accumulation Index, which is in fact down nearly 3%, for net outperformance of a little over 17.5%. Relative to most asset classes, shares have provided the best ungeared investment return since World War II. And over the longer term, shares of small companies have generally done a little better than the shares of their larger counterparts, given they offer the opportunity to focus on businesses that occupy profitable niches and have the opportunity to grow at a much faster rate. The second point to understand is the power of compounding, often referred to as the eighth wonder of the world. The table on the screen illustrates this using 4 differing annual average return scenarios over 4 differing periods and assumes a starting point of $10,000 and nil tax. A 20-year-old who invests $10,000 today and earns an average annual return of 3% for the next 40 years will end up with $32,600. Had that person received an annual average return of 12%, they would have ended up with a little over $930,000. While the average annual return between 3% and 12% is 4-fold, the amount in the kitty after 40 years is nearly 29-fold. Small differences in annual returns of various asset classes have a large impact on long-term results. While small companies generally involve more risk because of their lower liquidity, their greater sensitivity to management's influence, and their greater sensitivity to economic conditions, they have proven over long periods of time to be a rewarding asset class to allocate capital, preferably for patient investors who grasp the power of compounding. Gary Rollo and Dominic Rose, portfolio managers of the Montgomery Small Companies Fund, break down their audience of stocks into 4 categories: structural growth, cyclicals, resources, and stable compounders. At the time of this recording, the Montgomery Small Companies Fund portfolio and the index was structured as follows. Viewers will notice the overweight position to the structural growth sector, which are generally involved in cloud, deploying technology tools, data centres, digital payments, e-commerce, and medical technologies. And they have played a major role in the fund's large outperformance. Despite significantly stronger sales, EBITDA, and EPS growth, the valuations are priced at only a modest premium to the benchmark. Thanks for watching. We will be back with another video next week, and in the meantime, please follow us on Facebook and Twitter.